Hi, folks. I'm Jeff Clark. Now, if my name doesn't ring a bell, good. That's the way I like it. And you'll understand why in just a moment. For now, I can tell you this. I just moved my family 3,000 miles across the country, all the way from Silicon Valley to South Florida, just down the road from President Trump's Mar-a-Lago estate. And I'm not alone. In fact, I'm part of what the Wall Street Journal is calling the wealth exodus, where affluent citizens, including scores of Wall Street billionaires like Carl Icahn and tech titans like Elon Musk, flee liberal-run blue states for the saner, more tax-friendly spots like Florida and Texas. What's driving this exodus? It's simple. America is in crisis. Places like San Francisco, Chicago, and New York City have become crime-infested war zones. Elon Musk says the San Francisco Bay Area is in a doom spiral and is moving both Tesla and X out of California and into Texas. Major retailers like Target, Walgreens, and CVS are closing shops in New York City due to rampant crime and shoplifting. And Ken Griffin is moving Citadel, the biggest hedge fund in the world, from Chicago all the way to Florida, saying Chicago is like Afghanistan on a good day. And things are getting worse. We've got predators flowing across our borders. There's protests in the streets, riots on campuses. Political violence has gotten so bad, we had a near-miss assassination attempt on President Trump. And on top of that, our national debt sits at a record $35 trillion. Our government is so broken, it's spending billions of dollars a day just to pay interest. As a result, the cost of living has gotten so high that folks earning $150,000 a year, and that used to be a good paycheck, are using credit cards just to get by. A recent Gallup poll says Americans have completely lost faith in our institutions. We don't trust our banks, we don't trust the news media, and we sure don't trust our politicians. According to Reuters, 4 out of 5 Americans fear our nation is sliding into chaos. And I've got news for you, folks. We're already there. And here's the most important thing to understand. All of this chaos, all this turmoil, all this debt and crime and distrust, not only is it destroying our country, not only is it killing our way of life, but it's also killing the stock market as we know it. Flat out killing it. Of course, we hear all the time about stock sensations like Amazon, Apple, Nvidia, going up 10-fold or 20-fold or even more. But the truth is, very few investors ever realize big gains like that. And on the rare occasion when an individual investor does catch a home run stock, the win is offset by a portfolio full of stocks going in the other direction. In fact, according to JP Morgan, traditional investors, and I'm talking about folks who buy and hold stocks and mutual funds, well, they've earned an average return of 2.9% a year over the last 20 years. That's barely beating inflation. No wonder CBS News reports 2/3 of people turning 65 years old don't have enough money to retire. No wonder Forbes magazine says Gen X is facing a grim retirement. And here's the part that should scare the daylights out of you. The chaos, the uncertainty, the turmoil. It's about to get a whole lot worse. Now, of course, President Trump is in charge now, and he's promised a bold America First agenda designed to restore order. But we're not out of the woods yet. I mean, it's going to take a lot of time and energy fixing everything the left broke. And with the Democrats trying to undermine President Trump's policies every step of the way, chaos, at least in the short term, is going to escalate. And traditional investing, well, go ahead and pull the plug because it's dead. In fact, Goldman Sachs just warned that the S&P 500 is going to deliver a paltry 3% annual returns for the next 10 years. That's a devastating 70% plunge from its historical average. In other words, as rough as the last 20 years have been, going forward, it's going to be brutal for traditional investors. Now, for most folks, this is horrible news. But I'll tell you this, for me and my followers, this is very good news. I mean, actually, it's the best news I can imagine. Because here's the thing, periods of chaos, they're like the Super Bowl for traders like myself. In fact, the more turmoil, the better. Not only have I called nearly every market crash since 1987, along the way, I've helped my followers turn market chaos into over 1,000 winning trades across my services, including gains of 152%, 222%, even 490%. And here's a little secret that I usually keep to myself. Behind nearly every trade I've ever made, every prediction I've ever issued, and every dollar I've ever banked is a strange pattern that repeats itself over and over again at all scales. Scientists call this phenomenon a fractal. And although most people have never heard of them, fractals are woven into the world around us. Great Britain's coastline, for example, contains a fractal. The same pattern repeated over and over again all the way around the island. Fractals are found in trees, in snowflakes, in human lungs. Even our DNA contains fractal patterns. Now, because fractals provide a way to turn seeming randomness into a highly predictable sequence, they're being used across multiple industries to decode chaotic systems. For example, the American Association for the Advancement of Science reports that fractals are used to predict natural disasters, including hurricanes, tsunamis, and even earthquakes. Dr. Antonio De Leve, a neuroscientist who recently published a groundbreaking textbook, The Fractal Geometry of the Brain, says that surgeons use fractals to treat highly complex brain tumors. Fractals are even being used in the fight against cancer and Alzheimer's. Fractals are even embedded in our political system. In fact, President Trump's sweeping victory wasn't a surprise for anyone who understands the cyclical, repeating nature of fractals. In other words, after years of swinging to the left, America was destined to cycle back the other direction, returning to its common sense roots. That's right. Make America great again. It's about as fractal as it gets. Fractals have had such an extraordinary impact on society, the BBC says they've changed the world. And a team of international scientists recently dubbed them the magic pattern. This is incredible stuff. Of course, the magic pattern can also be used to find predictable sequences in the most chaotic system of them all, the stock market. For example, Paul Tudor Jones used them to help him call the 1987 Black Monday crash, and he pocketed $100 million as stocks plunged. Jim Simons, the legendary founder of the Medallion Fund, used them to help him generate a staggering annual return of 66% over 31 years. I mean, that's enough to turn $1,000 into $22 million. Now, to be clear, billionaires like Paul Tudor Jones and Jim Simons aren't going to share the magic pattern with you. And I've personally been so diligent about keeping the secret to myself, I turned down an invitation from CNBC to do a TV tell-all. But today, I can't remain silent. America is in chaos. And while the turmoil is threatening our way of life, it's also killing traditional investing. At the same time, it's setting up one of the biggest trading opportunities I've seen in my 40-year career. And it all centers on what I call the Trump surge sectors. Look, love him or hate him, President Trump is enacting a bold America First agenda designed to shake things up. His policies are already having a powerful impact on multiple sectors, everything from manufacturing to technology and even healthcare. I mean, you saw how Bitcoin hit a new record high after the election was won. Going forward, we're going to see dozens of stocks and ETFs surge, up and down, over and over again. In short, we're on the brink of a historic trading opportunity. Now, I promise you, not only could this opportunity be very lucrative, it's also going to be very exciting. But only for people who know how to use the magic pattern. I'll give you all the details in just a moment, but first, let me tell you a little bit more about myself. Hi again, folks. My name is Jeff Clark. And like I said, if that doesn't ring a bell, I think that's a good thing. You see, I was born on a small farm in Kansas. It was the very same farm my father was born on and the very same farm my grandfather grew up on. I don't like a lot of flash. I don't like a lot of hype, and you're not going to see me on TV. In fact, 20 years ago, CNBC caught wind of my track record and invited me on their airwaves. I politely declined. And it's not because I'm camera shy. That's not the case. It's because I didn't want to reveal my trade secrets. Instead, I've used them to help give my followers a chance to build wealth. And yeah, along the way, I've enjoyed incredibly good fortune myself. I have a home in Silicon Valley. I just built a second home in Florida, just down the road from President Trump's Mar-a-Lago spread. And that's right, I'm part of the mass wealth exodus. As tech billionaires and Wall Street's mega-rich people like Ken Griffin and Elon Musk ditch California and New York for South Florida. And while I don't have a TV audience, I have built a very loyal following. Over the years, I've managed money for some of America's wealthiest individuals: Silicon Valley CEOs, tech entrepreneurs, professional athletes. As you may have guessed, I've got more than a few devoted fans on Wall Street as well. For instance, just yesterday I did a quick scan of my follower list, and I counted at least 500 Wall Street hedge funders and investment bankers. I can't name names, but I can tell you my followers include 4 different players from JP Morgan, 6 from Morgan Stanley, 17 from Merrill Lynch, 22 from Wells Fargo, and 22 different folks from UBS, the Zurich-based investment bank that claims half the world's billionaires as its clients. Of course, I have no way of knowing what these firms do with my intel, but I can tell you, these are sophisticated people who demand results. And that's what I aim to deliver. As a result, my inbox is stuffed full of messages from devoted followers. One gentleman, whose identity I have to keep confidential, he sent me a note telling me that just one of my trade recommendations helped him make 10 times his money in about 4 months. He writes, "This is astonishing and remarkable. When I give colleagues a glimpse of my banking statement, they conclude that the 1,000% change must be a software error." Folks, I don't share all of this to brag. In fact, it makes me pretty darn uncomfortable talking about myself. And my grandfather, a man who spent his entire life working in the Kansas soil, well, he's probably looking down at me right now, gently shaking his finger. But today the stakes are too high for me to remain silent. In the coming days and weeks, I believe millions of investors are going to suffer tremendous pain. And it's going to stay rough for a very long time. Goldman Sachs predicts a lost decade is about to hit the stock market. Heck, even Warren Buffett, the king of buy and hold investing, has sold off massive tech positions and is holding over $325 billion in cash. Now, the good news is, you don't have to sit by and watch your portfolio implode. In fact, I turned my back on traditional investing over 40 years ago, and I've been using the magic pattern ever since. And as a result, I've handed my followers over 1,000 winning trades, giving them the chance to grow wealthy even as most investors have suffered devastating losses. For example, during the 2020 pandemic meltdown and the subsequent 2022 tech crash, traditional buy and hold investors saw $5 trillion wiped out. And since that time, I've shown my followers over 50 trades that could have doubled their money. And take what happened in the financial crisis back in 2008. Investors lost $8 trillion. But during the same period, I showed my followers 26 chances to double their money, including a 490% gain on Palomar, good enough to turn $1,000 into nearly $6,000 in less than a month. In times of chaos, the difference between traditional investing and short-term trading, it can be life-altering. Just ask my follower Jason B., who wrote to tell me that his portfolio was down to $170,000 in November of 2008. But thanks largely to my strategy and recommendations, he was back up to $480,000 less than a year later. In other words, in a period of extreme crisis, I helped Jason nearly triple his account. Same thing during the dot-com collapse. Back then, tech investors lost $5 trillion. But I showed my followers a 1,263% gain on Siebel Systems in 68 days. And that's good enough to turn $1,000 into over $13,000. I also delivered a 1,393% gain on Gateway Computer in less than 3 months. That was good enough to turn $1,000 into nearly $15,000. Now, of course, these are just some of my best performing trades. I don't always get everything right, and nothing in the market is guaranteed. But to be clear, the secret behind nearly every trade I've ever made is the scientific phenomenon known as the magic pattern. The magic pattern has been so critical to my investment success, I can't imagine trading without it. Tomorrow, if you told me that I couldn't use it, I'd probably pull all my money out of the stock market and stick it in a CD. See, in my opinion, the reason most people struggle financially, it's because they've never been taught how to use the magic pattern that I'm going to share with you today. Now get ready, because once I show you how it works, the magic pattern is going to open up a whole new world for you. Take what happened to my follower John, who wrote to say, "Another blowout week. You nailed it again. $65,000 realized gains this week." Now the great part is, using this phenomenon is simple, even for beginners. In fact, I showed my 23-year-old son Grant how to use it, and he doubled his money in a month's time. You could have the chance to do the same thing starting today, and I'll show you how in just a moment. But first, let me explain how the magic pattern works. As you know, markets move in big up and down cycles. They're called bull and bear markets. Bull markets go up, bear markets go down. Now, these up and down cycles are like the laws of physics. They're powerful, unyielding forces. Up and then down and up and then down, up and then down. Trying to go against these cyclical forces is pointless. Even borderline crazy. And yet, that's exactly what traditional investors try to do. Think about it. Traditional investors need stocks to go up in order to make money. But as we just saw, stocks don't just go up. They move in cycles. Up, then down, up, then down, up, then down. Trying to make money this way is kind of like trying to dog paddle up Niagara Falls. Sure, you have stretches where you see big returns, much like we're seeing the last few years, but eventually, as sure as day is followed by night, a down cycle is going to come along and erase months, if not years, of gains. And this is why, according to J.P. Morgan, most individual investors have earned 2.9% per year over the last 20 years. Now think about that. During one of the biggest bull markets in history, traditional investors barely beat inflation. As a result, CBS News reports that 2/3 of boomers hitting 65 years old don't have enough money for retirement. The problem with traditional investing is you end up holding stocks as they rise and holding them as they fall. And some stocks that go down, they never go back up. Remember GoPro, the action camera sensation? What a concept. The stock was a can't miss when it went public at $24 a share way back in 2014. And I'm sure there were TV pundits hyping the stock, calling it the next Amazon. Investors pushed GoPro all the way to $95 a share in just 3 months. You can bet there were scores of people who felt lucky to get in at $40 or $50 or even $60 a share. But 10 years later, the stock is sitting at about $1.25, down a portfolio-crushing 98%. BlackBerry is another example. I'm sure you remember BlackBerry. Talk about hot. They even made a movie about the BlackBerry frenzy. Unfortunately, BlackBerry cycled down and never cycled back up. In 2014, shares of BlackBerry were trading for $11.20. Today, shares are trading for $2.30. That's down 80%. The reality is, buying and holding stocks is a very rough way to make money over the long haul. There's just too many things that can go wrong. Markets can shift. Competitive advantages can be lost in the blink of an eye. For every Amazon that's going strong decades later, there are plenty of BlackBerries and GoPros. Companies like Radio Shack and Fitbit and Zynga, they were all flying high back in 2014. Now they don't exist. And again, when you tally it all up, even when you factor in home run stories like Amazon, the typical investor makes about 2.9% a year. That's not going to cut it. Now, fortunately, there's an alternative. Instead of being a victim of market cycles, you can harness them for a shot at big wins. And it all comes down to the magic pattern. Again, I've used it to call every market correction since the 1987 Black Monday crash. I've used it to show my followers over 1,000 winning trades. Of course, most people have never heard of this phenomenon. And the story behind it is truly fascinating. Back in 1962, an award-winning mathematician named Benoit Mandelbrot was studying cotton prices. Now, Mandelbrot was a smart guy. Not only was he a professor at Harvard, but he also lectured at Princeton, Yale, and MIT. But on this particular day in 1962, Mandelbrot was a bit stumped. You see, he noticed that when he removed time labels from his cotton price charts, they all looked the same. In other words, it was impossible to tell if the chart covered 1 year or 1 month or 1 week. In other words, the same pattern repeated itself over and over again, whether you measured it in days or weeks or years. It's the same pattern, and it's just occurring with much greater frequency. Now, of course, most people don't pay attention to these short-term ups and downs. But these short-term moves, they're not just random noise. In fact, these short-term cycles are actually predictable sequences. And when you know how to trade these short-term ups and downs, it changes everything. Instead of buying a stock here and then holding on to it for 3 or 5 or even 10 years through all these treacherous ups and downs, you can do what I do and play the short term. For example, in July, I spotted an opportunity with Wheaton Precious Metals. But instead of worrying about what would happen with Wheaton way out here in the long term, I focused on what was going to happen in the short term. And as a result, I showed my followers an 87% gain in 10 days. Same story a few days later in early August. I spotted an opportunity in Cisco. But instead of worrying about what would happen way out here in the long term, I focused on what would happen right here in the short term. As a result, I showed my followers a 94% gain in 9 days. And again, last November, I spotted an opportunity in Beyond Inc. But instead of focusing on what could possibly happen way out here in the long term, I focused on what would happen right here in the short term. And as a result, I showed my followers a 329% gain in 15 days on Beyond. And this is very important because the world has become so chaotic, so unpredictable, that the reasons for buying a stock here in 2024 may not even exist out here in 2025, let alone 2026 or beyond. Remember Blockbuster Video? Investors loved that stock. It was the classic Peter Lynch, buy and hold, make money on a stock that's part of your life strategy. But Blockbuster turned out to be a buy and hold trap that cost investors a lot of money. Take a look. After peaking, Blockbuster began to suffer competitive pressure from Netflix and its more convenient on-demand service. Of course, when Blockbuster began to slide, the buy and hold crowd said, "Don't sell it, it's going to come back." Even Jim Cramer did some version of his buy routine, telling his TV audience that Blockbuster shares would go higher and beat Netflix. The problem is, Blockbuster didn't come back. It dropped 99%, all the way down to 23 cents a share. And this wasn't a penny stock that you might buy on a whim. This was a rock-solid blue chip with a $5 billion market cap that got crushed by inevitable change. And what about Chegg, Inc., the $11 billion online education company? Back around 2018, Chegg became a sensation by using technology to offer affordable educational resources to college students. Investors poured in, driving shares from $20 to over $96 a share. Unfortunately, AI and ChatGPT came along and was able to do what Chegg could do for free. The stock plunged 98%, wiping out billions of dollars in shareholder value. And in today's rapidly changing world, traditional investing carries so much exposure. Look, these days we have no idea what's going to happen in the next 30 hours, let alone the next year. And if you ask me, the buy and hold strategy has become more of a buy and pray strategy that rarely pays off. The magic pattern is different. It's the anti-buy and hold. It allows you to get in and out fast before the world can shift on you. Take what happened back on September 18th, 2024. That's the day the Fed cut interest rates by a hefty 50 basis points. Now, low interest rates are typically bullish for gold. And with more rate cuts coming, many traditional investors felt that it was time to add gold to their portfolio for the long haul. But to me, there's too much uncertainty and risk in that way of thinking. Take a look at this chart. This is GDX. It's a gold miner ETF that moves typically in sync with gold prices. Do you see all the ups and downs that GDX has experienced over the last 18 years since it began trading? If you'd bought GDX when it first started trading, you'd have seen a rise of 7% over 18 years. That's simply not worth my time. And it's exactly why I focus on the short term. Now, my analysis of GDX's magic pattern told me that it was ready for a short-term fall. And on September 18th at 2:34 p.m., I told my followers to make a trade betting that GDX would drop. And just 47 minutes later, at 3:21, gold had reversed course and taken a dive. Now, people who took my instructions could have made 49% in just 47 minutes. If you'd put $1,000 into this play, you'd have gotten your money back along with a $490 profit in less than an hour. In and out, profit in hand, and ready for another play. Now, let me share something very important. As you can see, during our GDX trade, the ETF only moved about 2%. And yet, we hit a gain for 47% in a matter of minutes. How did we do it? It's simple. For the last 40 years, instead of trading stocks, I've traded options. Now, I realize many people have never taken advantage of options. And I also realize that many people have heard that options are risky. This is a myth that's kept millions of investors from reaching financial independence. Because the truth is, options were created as a way to reduce risk, to reduce the need to hold stocks through long-term ups and downs. And when buying an option, your risk is limited to just the premium paid. And here's another important point. With options, we can make money when stocks go up and when stocks go down. The trade I just showed you with GDX, traditional investors had to stomach the plunge and pray that shares reverse course. But not my followers. I recommended a simple option play to make money on the plunge. 49% in less than an hour. Now, of course, options work to the upside as well. In fact, earlier in the year, pundits were trashing gold, and as a result, it was pretty much in free fall. Some investors were frantically dumping gold just to cut their losses. Other investors were staying the course, bracing themselves for a long downside. But I was doing something completely different. In fact, I instructed my followers to buy a simple call option which would go higher if gold surged. And that's exactly what happened. Just 6 trading days later, I told my followers to exit the trade. And folks who listened could have pocketed a 222% win in about a week. That's a triple. I mean, it's a chance to turn $1,000 into over $3,000, or even $10,000 into over $30,000. And again, there's no concern for gold's long-term outlook. There's no long-term waiting, suffering through stressful ups and downs, hoping things end up in positive territory at the end of 3 or 5 or even 10 years. There's only decisive action, in and out, fast. And here's what makes this even better. As I mentioned, fractals are repeating patterns that occur at all scales. And that means once you tap into the magic pattern, you can hit the same trade over and over again. For example, the 2 winning trades that I just showed you on GDX, they were just the tip of the iceberg. In fact, in the last 5 years alone, I've used the magic pattern to hit nearly 60 winning trades on GDX across all of my services. Now, I'm talking about explosive wins, including an 85% gain in 2 weeks, a 152% gain in 1 week, 273% in 8 days. Like I said, nearly 60 wins on the same ETF. And let me be clear, the magic pattern is not limited to gold. This phenomenon, it's present across all asset classes. In fact, the magic pattern treats all asset classes as equals. It doesn't prefer mining over retail. It doesn't prefer energy over tech. And most importantly, it never falls in love with a hot stock or a trend. It simply takes what the market serves up with cold detachment. This alone can be the difference between a nice win or a brutal loss. For example, this past spring, investors were head over heels for the Magnificent Seven. I'm talking about the beloved tech stocks, including NVIDIA and Apple. Emotion, hype, along with the fear of missing out, had driven the Magnificent Seven to insane levels. And yet, despite the ridiculous valuations, investors kept chasing the Mag 7, higher and higher and higher. Fortunately, the magic pattern wasn't fooled by the financial media's hype. And on June 18th, I warned that alarm bells were sounding in the tech sector. And that same day, NVIDIA began a plunge that took it down 33% over the next month or so. The rest of the Mag 7 followed NVIDIA down, costing investors nearly $3 trillion. Thanks to the magic pattern, I helped folks sidestep the plunge. And instead of riding the white-hot Mag 7 to devastating losses, we made a handful of short-term trades on boring stocks that nobody was paying attention to. For example, we hit Kraft Heinz, the 150-year-old food processing company, for a 97% gain in just 8 trading days. And during the same period, we also hit Cisco for 67% in 3 weeks, and DBX for 57% in 2 weeks. And then we did Cisco again for 56% in 2 days, and Wheaton Precious Metals for 87% in 9 days. And we did Cisco a third time, this time for 94% in 8 days. And like I said, once you tap into the magic pattern, you can go back to the well again and again. Now, of course, I don't always get it right as there's risk in all investing. But here's the thing. With the magic pattern, investing can become much less complicated and much less stressful. You don't have to search for the next home run miracle stock. You don't have to care about underlying fundamentals. You don't need to stress about a company going bankrupt or getting its profit margins squeezed by the competition. The only thing that matters is the magic pattern and the opportunities that it unlocks. As I mentioned, I don't like a lot of flash, and I'm not going to stand here and brag about the incredible lifestyle that the magic pattern has afforded me. But I do want to mention one huge perk that comes hand in hand with the magic pattern. In fact, the thing I love most about the magic pattern is the freedom that it gives me. Back in August, I took my family to Puglia for a month. And while I was there, my phone buzzed, and it was alerting me to an opportunity. As a result, I closed out a trade on Wheaton Precious Metals for an 87% gain in 9 days. And a couple of days later, my phone buzzed again. And this time, I tapped a few buttons and opened a trade on Cisco Systems. And that was good for a 94% gain in 8 days. Oh, and by the way, when I returned back to California in late August, I'd barely finished walking through the door when I picked up my phone again and analyzed the magic pattern. It traded, this time, good old GDX for a 22% gain in 2 days. Now, in short, with the magic pattern in hand, I'm free. I can make money from anywhere in the world on my own terms. Now, of course, this is very different than how most people invest. I'm not suggesting that you just give up on your current portfolio, but if what you're doing is working for you, stay the course. But consider this. Simply adding the magic pattern to your investment arsenal could be a really smart move, especially in the coming weeks and months. Think of it. America is in crisis, and all the chaos, all the turmoil, all the uncertainty. It's going to make traditional investing nearly impossible. The king of buy and hold, Warren Buffett, he's already unloaded stock positions and he's sitting on over $325 billion in cash. And Goldman Sachs predicts that the stock market is going to deliver a measly 3% a year for the next decade. Now, after inflation, traditional investors, they're going to be lucky to even break even. Now, if that works for you, so be it. But for folks who want to live in a different reality, in a world where you can still build wealth, I've arranged a very special opportunity. In fact, for folks who want to learn more about the magic pattern, I've set up a test drive. It's a chance for you to give the magic pattern a try without making any long-term commitments. See, that way, you can get a feel for how it works. And that's what happened with one of my followers, a gentleman named Bob, who gave the magic pattern a test drive. And he wrote in to say, "Sir, you now have my attention. In less than 1 week, I'm up over $3,600 after 4 trades. You passed the test, Jeff. Let's go." I'm confident you can enjoy the same success very soon. But why not find out for yourself? I'll show you how you can start your own test drive in just a moment. But first, there's something very important that I need to make clear. Knowing the magic pattern exists is not enough. Just because you know a stock is going to cycle up and down, that doesn't mean you can rush into a trade. The key to success comes down to pinpointing the moment a stock pivots and begins moving in the opposite direction. Because when you can spot this pivot point, all you need to do is make a quick trade that captures the short-term move. Now, I've spent decades studying the magic pattern. And during that time, I've tested and analyzed just about every market indicator known to man. And what I discovered is none of them work consistently, at least not to the extent that I wanted. So instead of accepting mediocrity, I created my own proprietary composite indicator. It's actually a combination of 3 different indicators filtered through the lens of my 40 years of trading experience. And when these 3 indicators align themselves in a very specific configuration, it tells me a tradable pivot point is at hand. And from there, it really just becomes a matter of entering a simple option trade designed to capture the short-term move. Of course, as I mentioned, I'm not the only trader to use a version of the magic pattern. But people who know how to use it, billionaires like Paul Tudor Jones and Jim Simons, they're not going to share it with you. And it would be kind of foolish of me to reveal the details of my trading strategy in a big public forum like this. I mean, it would diminish what I reserve for my followers. So with that in mind, when you join us for your test drive, you'll get a comprehensive breakdown of my entire strategy. For now, let me share just one indicator. It's the foundation of my trading strategy. I call it return to the average. It's also known as reversion to the mean. As you know, a stock's price line moves across time and cycles. And you can see this on the chart. It goes up and then down over and over again. This is the essence of the magic pattern. Now, what you don't see on the chart, and what I'm going to add now, is something called the moving average. The moving average is the stock's average price over a specified period of time. And here's the thing, no matter how far the price line strays from the moving average, it always returns. Now, each stock and each ETF is different. And over the years, I built a database telling me how far each stock's price line and ETF can move from its moving average before a snapback moment becomes imminent. For some stocks, this snapback threshold might be as little as 5%. For others, it could be 20%, maybe even more. My algorithm tracks over 4,000 stocks daily. And when a stock hits its snapback threshold, I move it to my watch list for extensive analysis. And from there, I use my indicators to help me pinpoint when the stock is ready to pivot and move in the opposite direction. Take what happened earlier this year with Palantir. At the time, Palantir had been in a downtrend for about 3 months. And as I applied my indicators to Palantir, I determined that it was ready to snap higher. And just 2 days later, that's exactly what happened. Folks who followed my instructions could have made 167% in just 48 hours. That's good enough to turn a $1,000 stake into $2,670. Or $10,000 into $26,670 in just 2 days. Not bad. And again, it all comes down to reading the magic pattern. Here's another example, this time with Beyond Inc. Last November, Beyond had been in free fall for about 3 months, dropping from nearly $38 a share in August to around $16 a share. In other words, the stock was completely out of favor. But when I applied my indicators to Beyond's magic pattern, I determined that the stock was oversold and it was ready to move higher. I instructed readers to buy a call option on Beyond, betting on an upward swing. And it took just 2 weeks. Beyond spiked, and folks who took the trade could have made 329% in just 15 days. That's good enough to turn $1,000 into over $4,200. Or $10,000 into over $42,000. I mean, sometimes the trades play out even faster. For example, toward the end of August, my algorithm put the triple Qs on my watch list, telling me that QQQ was nearing the end of an upswing and it was ready to pivot. And that's exactly what happened. On August 26th at 9:38 a.m., I analyzed my 3 indicators and determined that a pivot point was at hand. So I issued detailed trading instructions telling folks exactly how to play it. And it was just 58 minutes later, at 10:36 a.m., QQQ had turned and moved to the downside. Folks following my instructions had a chance to nail a 31% gain in just 58 minutes. In a matter of 58 minutes, you'd have an extra $300 in your pocket and be ready to take another trade. And remember, once you tap into the rhythm of a stock's magic pattern, you can often hit it again in the opposite direction. In fact, almost immediately after closing out the triple Qs for 31% in 58 minutes, I determined that QQQ was ready to reverse course and move to the upside. On September 4th at 9:31 a.m., I issued detailed trading instructions telling folks exactly how to play it. Just 57 minutes later, at 10:28 a.m., QQQ surged back to the upside. Folks who followed my instructions could have seen a 43% gain in less than an hour. Another quick $430 cash profit in your pocket. And remember, we're not looking for long-term home runs. All we want to do is capture a small, short-term move. Take the play we recently made on Yum China. It's a fast food operator in China. On September 13th, my indicators aligned in a specific combination within the magic pattern, telling me that YUMC was poised for an upward surge. And less than 2 weeks later, on September 24th, it had bolted higher, and I instructed folks to close out the trade for a 227% gain. That's good enough to turn $10,000 into $32,000 in 11 days. Every day the market is open, the magic pattern is on the move. And when you know how to play it, the short-term wins, they come fast. I personally delivered over 1,000 winning trade recommendations to my followers. Consequently, I've managed money for some of America's wealthiest individuals. And today, 500 Wall Street big shots follow my every word. These are sophisticated people who demand results, whether the markets are good or bad. And I'm proud to say, I have a file full of personal notes from folks across all of my services expressing gratitude for the work that I put in. For example, Josh H. sent me a message saying, $40,000 in profits this week. Last week I made $50,000. Steve B. wrote to say, I made a 171% gain on payday. Nice job, thanks. And Thomas M. sent me a note saying, today I closed out the GDX call option you recommended for a 150% gain in less than 3 weeks. Thanks, and keep up the great work. Here's the bottom line. By using the magic pattern, I'm able to turn market chaos and volatility into a shot at quick, explosive wins. In short, I help folks make money no matter how crazy or treacherous the markets get. And this has never been more important, because as rough as the markets have been in the last few years, as hard as it's been to make money buying and holding stocks, we live in an utterly chaotic, dangerous, and volatile world. And it's about to get worse. Debt, inflation, political turmoil, all of it is colliding to kill traditional investing. Goldman Sachs has forecasted the stock market is going to deliver a 3% annual gain for the next 10 years. 3%. After inflation, traditional investors are going in the wrong direction. Go ahead and ask yourself, is that what you want for the next 10 years? Or do you want a chance to build some serious wealth? Because if wealth is your goal, the next decade could offer the greatest opportunity of your lifetime. But only if you know how to play the market chaos and volatility. And that's what the magic pattern is all about. And it's why I urge you to give it a test drive right now, today, while it's fresh on your mind. Remember, I've called nearly every market crash since 1987. And I've used these periods of chaos to help my followers amass fortunes, even as most investors suffered. And the coming chaos is not going to be any different. The only question is, which side of the fence will you land on? Let's do this. Go ahead and join me for a test drive of my flagship publication, Jeff Clark Trader. And then get ready, because at this moment, a historic trading opportunity is forming. And it all centers on what I call the Trump surge sectors. Look, President Trump is already working to fix the mess that the liberal left created over the last 4 years. And as he implements his agenda, I believe there are 3 specific sectors that are going to get an extraordinary boost. In other words, I expect these 3 sectors to surge wildly up and down in the coming weeks and months and years. Now remember, over the last 5 years, I used GDX to play the gold sector for nearly 60 wins. And even though GDX only moved about 10 points during that time, my followers saw gains of 207%, 222%, and even 268%. I've identified 3 sector ETFs that I expect to surge up and down at least 2,700% during the new Trump era, giving my followers the chance to see similar gains. To help you play these opportunities over and over again, I put together a special report titled The Trump Surge Sectors. In the report, I'll detail the 3 sectors poised to surge 2,700%. I'll show you why I believe President Trump is going to turn them into extraordinary trading vehicles. Most importantly, I'll show you exactly how you can take advantage of these opportunities over and over again as they surge up and down. Now, the report is yours, absolutely free, the moment you agree to give Jeff Clark Trader a test drive today. Of course, this is only the beginning of your Jeff Clark Trader experience. At least once a month, I'll select the very best trade opportunity available and send it to you for your review. And by the way, some months you may even get 3 or 4, sometimes even 5 trades all in the same month. When the opportunity presents itself, we're going to strike. Remember, these are short-term plays, in and out in a matter of days and sometimes even hours. The moment you join us, I'm going to send you another special report that I call the Magic Pattern. This one-of-a-kind resource details exactly how I analyze each stock's magic pattern and then use my indicators to pinpoint trade opportunities. Remember, this information gives me such a critical advantage, I've never fully revealed it in a large public setting. And it's yours, absolutely free, just for giving Jeff Clark Trader a test drive. And there's something else that I want you to have. It's my Masterclass video training series. This is an 8-part series that covers critical, must-know information about short-term trading. In fact, these videos dive deep into the details. The series is over 240 minutes, and it's chock full of strategies, tactics, and techniques. Now, in addition to the video series, I've also built a trading library. And of course, the video series itself is quite extensive, but some of the information that I wanted to share seemed better suited for a written format. I've created 21 special reports, each covering a different element of short-term trading. For example, inside my trading library, you'll discover the historic splintering, how to profit from the greatest stock market disruption in decades. The 21 ways to leverage the power of AI and ChatGPT to enhance your short-term trading, right from your smartphone. My Leave Your Wallet at Home strategy, in which I'll show you how you can create income from anywhere in the world with just a smartphone. And my Bitcoin 3-second challenge, in which you'll learn a unique way to trade this volatile asset for quick, explosive wins. And by the way, most investors have never used options. And I realize options might be new for you as well. But don't worry, I got you covered. In fact, inside my trading library, I've included 3 separate special reports written specifically for folks that are brand new to options. These options trading special reports include how to open an options account, how to open and close an options trade, and the complete guide to options trading. These options trading reports contain everything that I wish I knew when I began trading options 40 years ago. As you can see, I've included everything that you're going to need to maximize your Jeff Clark Trader test drive. Let me summarize everything you're going to get. We'll start with my special report, The Trump Surge Sectors, detailing the 3 ETFs I believe President Trump's agenda could send soaring 2,700%. And then, at least once a month, you'll get a detailed trade recommendation with complete magic pattern analysis. I'll also provide detailed step-by-step trading instructions so you're never in doubt. And keep your eyes open because some months I provide 3, 4, maybe even 5 trade recommendations. You're also going to get my special report, The Magic Pattern, giving you a complete breakdown on the market's fractal nature and how I use my composite indicator to identify trade opportunities. In addition, you'll get my Masterclass video training series. This 8-part course will take you from complete beginner to seasoned expert in no time. You'll also get my trading library, including 23 special reports covering fascinating topics, everything from my Leave Your Wallet at Home strategy to my Bitcoin 3-second challenge. And finally, you'll get my complete collection of options trading resources. As you can see, this is a high-value opportunity. And you might be wondering, how much does this all cost? That's the best part. As you may know, some research services can run into the thousands of dollars. In fact, my Alliance members pay thousands of dollars to access this type of material. And Jeff Clark Trader retails for $499 per year. But this is being offered for a fraction of that price. But like I said, I want you to get a feel for how all of this works before you make any sort of long-term commitment. And with that in mind, I'm going to let you test drive Jeff Clark Trader for the next 60 days at an extreme discount. And it will give you access to trading strategies and expertise that I've been honing and perfecting for over 40 years. At the same time, it's going to put real trades in your hands, opportunities to harness the power of the magic pattern. As I showed you before, we've hit winning trades for as much as 49% in less than an hour, 54% in less than a day, 207% in less than a week, and 490% in less than a month. Over the next 60 days, I'm going to do everything in my power to give you the same experience. Of course, all investments carry risks, and past performance doesn't indicate future success. You should never invest more than you can afford to lose. But think of it this way. The world is changing, and the markets are changing. A test drive of Jeff Clark Trader could open financial doors that you've never been through. It could change the way you approach the markets. And it could give you a chance to make serious money even as most people suffer losses. I strongly urge you to give my Jeff Clark Trader test drive a real shot. Get the trade alerts, explore the video training series, check out the Trump Surge Sectors report, dive into the trading library, take full advantage of all the resources. And if after 60 days you decide that this isn't suitable for you, just say the word. I'll give you a full refund and we can part ways as friends. And as a way of saying thank you for giving me a test drive, you can keep the 2 special reports, absolutely free. Now, of course, I hope you'll stay with me. As I said, chaos is the new norm, and I expect to trade it for historic opportunities. And I'd love to have the chance to bring you along on what could be the greatest profit run of your life. But look, you don't have to make that decision now. Go ahead, hit the special offer button on your screen. It's going to take you to a secure page where you can review this opportunity in full and at your leisure. And by the way, even if you decide that this isn't for you, I really appreciate you watching. I'm Jeff Clark, and I'll see you soon.